I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go ask Slim.
Hi, I'm Steve Miller. Call me Slim. And this is the Ask Slim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week and some interesting things in the middle. Well, this has been an interesting week for sure. A very choppy week in the stock market, and on Friday turning south and really giving a lot of ground on Friday. So weak stocks we're looking at right here. Oil still a factor as it has moved the stock market around a bit this week, but more decoupled, I would say, than we've seen it in a while. Talk about decoupling. I mean, the bond market and the stock market. The bond market has been very strong all week long. It doesn't seem to matter what the stock market does. A little bit of a move up in the stock market, bonds might come down a little bit, but then all of a sudden bids come back in there, and we have seen bids all week long in the bond market. We'll see that later on in the show. In the short-term view, well, it's NIRP, negative interest rate policy, or NIRP as they call it. That talk seems to be all over the place, and now they're talking about the possibility someday of it coming here to the U.S. This is madness. We have negative interest rates in so many places in the world. I think it's a world that's going crazy. I mean, you've got these governments that are simply trying to manipulate and stimulate these markets, and what do you get when they do that? Well, you get periods of deflationary pockets like we have going right now. You can't keep having these governments trying to spend all this money and then not eventually have to come and pay the debts. And that's what we're running into right now. They cannot hardly stimulate anymore, and earnings are really suffering. I mean, especially bank earnings, and we've seen banks coming apart really in the Eurozone as they face negative interest rate policy. How can you earn money when there is no interest? Of course, lots of people suffering that too, right on the backs of seniors and savers. They tried to save all of these world economies as nobody can get any money on their money, and that is a sad thing. Well, what do we have? A binge essentially of buying going on in some of the beaten up stocks because, well, when you have all of this potential stimulus of negative interest rates, then they start to look at, well, the possibility of, well, maybe currency war, maybe each country trying to lower the value of their currencies to stimulate more. Well, then you get bids in some of these beaten up stocks. We've seen the steels and the mining stocks and the gold stocks and the chemical stocks and just all these materials getting bids this week, and that's kind of where we are in the cycle. But there are earnings craters out there as we've seen some big moves to the downside, and I'm going to show you that in the best, which there's a few good stocks, and the worst of the week. So the issue here is a lot of negative guidance, and we've had all of this period of revenues being a lot weaker than bottom line earnings. Well, of course, that's through financial engineering and other ways that they have tried to buoy up these markets so we all feel richer, right? But now they're running out of the ability to do that too, and it's really coming home because now these earnings are not getting there, and guidance is very weak in a lot of these big stocks. So this scenario that we're seeing in here is just really negative, and that's why we're seeing these stocks under such pressure. And I have a lot of political comments I could make about that, because we may be facing, no matter who becomes president in 2017, that they're going to be just neither policy is going to be very good for the stock market, and that could be what we're facing right now. So we have this selling going on in the stock market, money moving into the bond market in a haven bid, or maybe just because there's nowhere else else to put it. And when you have U.S. rates, hovering just under 2% in the 10-year, that's a lot better than the negative interest rates they're getting somewhere else. So money is flying into our bond market. Let's take a look at what happened in the markets this last week as we look at the 60-minute chart of ES. That's the E-mini S&Ps, and we'll look at what influences there were that moved the markets during the week and all of this chop that we were looking at. So here is the 60-minute chart on the S&P 500. Gray area is the overnight trading, and the white area is the day trading during the normal pit hours. Monday comes, you could see overnight we had some sloppiness in there as China reports the weakest manufacturing data since 2012 and showing a contraction. Saudi said no emergency meeting from now on oil. Oil plunged 4%, and that looked a little bad for oil, but it had a big bounce later. U.S. stocks, well, they opened a little bit on the soft side, you see that, but then had a big bounce in there as oil and the stock market did start to decouple at that point. Oil down, and then the stock market moving to the plus side. Energy stocks were hit hard on Monday. Eurozone and China were down 1 and 1.8%. Japan up about 2% on the day, and Twitter has a big jump on buyout speculation. Comes Tuesday, and you can see what happened overnight. Markets get sold, and then during the day, markets get sold. Eurozone down 1.7%. Oil falls 4% again, so that oil putting pressure on the markets. China gets a 2.2% gain. Google comes out with a big beat, and that could be no help, if you could spell help correctly, for the U.S. As the market just keeps moving down. And that turned out to be probably a fake. We saw some fakes in earnings as the markets turn weak. And Google overtakes Apple for the highest cap stock out there. They've been dancing that one back and forth. ES, the E-mini S&P, down 27 points early, and energies remained weak. Comes on Wednesday, and overseas markets are softer. Eurozone down 1.6%. China, well, a little bit flat. Japan down 3%. German 2-year notes. This is the crazy thing in here. They hit minus 50 basis points, 0.5% on the 2-year notes minus. That's just a sickness in there. Is you could give them your $100,000 to hold. Well, that's what banks there have to do for a year, and they're going to give you back $99,500 for the pleasure of holding your money. Eurozone banks under a ton of pressure as negative interest rate policy is really affecting them. Oil has a reversal overnight, so you could see this decline in ES, and then oil reverses up, but then the E-mini S&Ps, they can't hold it, and that gets a big slap to the downside on the opening. Look at that big decline in there, and that kind of made the low for the week, which is getting tested here on Friday. ADP comes out up 205K. That's a little better than expected for this private sector job creation, but turns out Friday not so good. So we have this big rally back in here in the markets on the close on Wednesday, and then we come to Thursday, and you could see they tried to follow through overnight but couldn't make it, and the chop comes in. They get a big rally in the morning and couldn't hold it. The world markets were mixed to higher, but U.S. just this big chop. Factory orders extraordinarily weak, but there's a lot of focus on a dollar collapse going on. The dollar then moves sharply lower. We were looking for that big decline in the dollar. It's the biggest two-day drop in the dollar in 7 years. Gold, silver surging. We caught that in a big way. If you are a subscriber to our rankings and setups, you're on the right side of that one. Great news for all of you. COP dividend cut, the first one in 25 years, as the yields on these oil stocks are just extraordinary. Coals KSS, a huge miss. Warrants, hurts the retailers, and a big plunge in there. Comes Friday, everybody overnight waiting for the payroll numbers. Not a lot going on. Payrolls up 151K. They miss. Unemployment rate, though, 4.9%. And we have the participation rate still at 62.7%. So 4.9% is a bogus number because the participation rate is so low and people just aren't, even looking for jobs. Why should they? The government gives them the money. So we have 1/7 of the entire U.S. population on food stamps, and so government does the hands out. People don't have to work, and so that makes this number fake. U.S. stocks, well, they're headed down early in the day, and you could see what's going on in here as we get here into the last couple hours of the day, and a big decline. At worst point, S&P's down nearly 40 points. Wage increase, the biggest since 2009. I don't believe that number. And the accelerated selling you can just see in here on Friday. So this has been a week of big, massive chop. And the real interesting thing is that the rally that we saw early on in the week in the stock market, well, that tagged our number exactly. We're going to show you that in the short-term view of the coming week. Now we're going to look at the economic calendar for the coming week, and it is lightening up a little bit in here because, well, we're getting just to the tail end of the earnings season. Not a lot of economic events that are coming out this week. So here is a look at that earnings calendar, and you can see in here that there are still some few important earnings coming out in the things that we follow. Generally, the earnings reports that you see in here, which the top is the before the opening and the middle one there is after the close, that's our earnings in the 330 stocks that we follow. We essentially follow the best traded stocks, high caps and some mid caps, and so pretty much the stuff that most people look at. So you can see economic calendar wise for the coming week, there is not a lot of real significant reports. The consumer sentiment can move the market a little bit in here. Retail sales can move the market on Friday. And also, if you're a follower of the drilling stocks, this right here, this rig count report can move that group. So you might want to keep your eye on that on Friday. That is the opening segment for this week. A reminder for those people who don't know it yet, next week is our off week here at Ask Slim. We're still going to be doing lots of stuff for our members, but there will be no Market Week video in the coming week, and then we will be back with Market Week in 2 weeks. That's it. We'll be back in a couple moments with the best and worst for the week. For the best of the week, well, first I have to say this has been one great week for our style of analysis. We do cycle analysis, and we look for rhythms in the markets based on looking for repeating lows and using many other tools with that. And this has been one great week for the cycle analysis. I'm going to show you in the best of the week and in the worst of the week how these things have just lined up incredibly. The best stock for the week, Kors, K-O-R-S, a monster move in here, and timing-wise, it was like right on. Kors up 32% for the week on a great earnings report. Their revenues were really strong. That was for Q4, and they give a lot of credit to footwear, which I was glad to see that because it lifted Nike and gave me an opportunity to sell it because Nike looked bearish to me, and so that worked out nicely. And Kors, well, this is one great pattern. Take a look here at this Kors chart, and for those of you that are new to our cycle analysis. These cycle brackets down here tell us how there's an alignment, a rhythm in the markets, and they point to lows in the markets, and then when they're nested, when there's two of them right over here, that's a more significant time period right there. So there you could see the cycle brackets, and if you look over here, there were two of them getting ready to bottom. When you see these two blue spikes right there, that gives you the window of time that our low is expected. And look at this monster upside move, 32% in there, and a major bottom set in cores. So this one looks absolutely great. Now, this is a big move, and we're going to look for a pullback in here, but I would say once you get a pullback, this stock is very buyable. Now, as far as the next big gainers, the next 7 on my list, and I'm just going to show you one of them, were all in the precious metals, metals category, materials category, up 20 to 27% in there, and that is the silver, one of the silver stocks that have been my favorite, and was long it up right until today, and actually reduced my holding significantly. Look at this move as the stock comes from $5 here all the way up to over $8. Just a fantastic percentage gain in there. We were positive. You could see our cycle projections in there, and just absolutely great. You could see where the bottom was due. There it comes. We get the rally, and just a super pattern. We had AU, Hekla, Newmont, AG, Goldcorp, GG, CLF, FCX, Alcoa, tons of steel stocks all doing this. Take a look at GDX just for the fun of it, and you'll see what the gold miners look like. This is on our list of favorites also, and you could see here we were looking for a rally. You could see these two nested cycles, say a low is due, and then this big rally moving on the upside. So really positive move in there. Maybe the world is looking at the fact that the influence of President Obama on the coal stocks is going to go away. Well, CNX, this is a move that, well, take a look at this. From $48 all the way down to $4 just in this last year and something. And now you could see in here, the cyclical rhythms said a low was due, and there it goes. And the stock has a monstrous gain over 3 weeks. I think this is the bottom for coal stocks. And I think that you're going to get some little pullback in here at some point, and I think they're very viable. And China, they're like building a coal plant every week, so I don't think that they're going to be done using coal for a long period of time. And I think the big clean energy movement here in the U.S. and all of these agreements that they're worked on, well, I think that there's going to be a move back into coal, and at least a move back into coal stocks. So this is a bottom in place, 26% gain in there, and a super looking pattern as far as I am concerned. Take a look at U.S. Steel. Stock moves down similarly from 46 all the way down to 6. This has our colored cycle phasing in there. Our chart subscribers all get this and know what they mean, but basically green zones are rising phases. You could see that right here. The yellow zone is the corrective phase, and the red zone, when they have a big break underneath key cycle areas, are right there, and you could see signaling to come down right to this point right here. So that's how these things work. Our latest red zone ended, and now we moved into a green zone. This stock could trade all the way up to a price of about 12 before this is over with. So again, just the beginning of the upside move, and U.S. Steel has this 19% gain on the week. One other one we're going to look at here on the charts is STX, Seagate Technology. You can see in here we were expecting a bottom to come. That's signaled by these two lines right in here. You could see that's right in here, and the bottom comes perfectly, and now it turns to the plus side. This, by the way, is a morning star right there based on the candlesticks, and that looks like an important bottom in there. Interestingly, they had a big earnings beat. It was good, and insider buying going on. So STX, it trades a lot like WDC, Western Digital. Both of those stocks we actually think you can buy on dips. So that is the last chart of the best of the week. I'll show you. Favorable mention goes to Joy Manufacturing, JOY. That, of course, moves up with mining material stocks That's up 21% in the week. I don't like that pattern. I don't think that can hold. So we're going to go in a minute to the worst of the week, and what I'm going to show you is a bunch of disasters. See you in a second. All right, worst of the week. We often say to our subscribers, and I answer this in emails all the time, that when a stock is in what we consider to be a negative phase or a declining phase, that is the riskiest time for it. You can get some awfully big declines during that period. I'm going to show you a number of stocks right in a row here that were in negative phases that just brought absolute craters in here. And we're going to start with the worst of the week, LinkedIn. Got to tell you about LinkedIn. LinkedIn is a stock that I loved last year, and I thought that the model was absolutely great. And then we saw the pattern breaking down, and we saw that it was in a negative declining pattern. We would never do anything but be a seller under that condition for our shorter term trades, and no position coming into the earnings report here, but 43% on the downside on those earnings. That is just an absolute incredible crater. And here you could see in here the cyclical rhythms, and I'll draw them out for you as you see the rally and decline and the rally in decline. You could see how that lines up with the cycle brackets on the bottom in there, the rally and then a decline, and then almost no visible rally in here, and then this extension on the downside. Look at this over here. It is just absolutely a nightmare, and these holders in here are just getting annihilated. Big, huge miss, guide lower on the downside, and I cannot count the number of analysts that are downgrading the stock today. Can you imagine that? They can't possibly have the stock as a buy when it goes down 43%. They're such idiots. And so, of course, they didn't get anybody out of the stock, and now they are downgrading the stock. Targets being lowered, downgrades, they are so bad. It's incredible. Next thing we're going to look at is MPC. This is an interesting one, as they're down 18% on the week. Their revenue's a big miss. The issue in here for refiners is that they hold inventories, and in the case of MPC, they have marked down their inventories, and of course they were just probably holding at ridiculous numbers in there. Well, they have to mark to the market, and then the stock gets absolutely cratered. Tesoro, Valero, PSX, they're all been in declining modes. We don't have a low in here until March right there. So this big pattern in here, it's been in this declining mode. The cycle breakdown was right up over here at under 48, and the stock right now is 32, so that is a pretty good thing. Let's just take a peek here at the slim ribbon on the daily chart so you can see in here how this works as far as negative momentum goes. If you have a slim ribbon on your chart, that's where the momentum turned negative right over here. We'll call that at 52, and then the stock stayed negative momentum through this whole time period. So that's a look at MPC, and a bad looking chart when you look at that. And we'll blow this up again for you to see this negative cyclical pattern, and the low not due for, well, another, we'll call it, month or more. EA, Electronic Arts, down 17% on the week. This is essentially a follow-through after its earnings report on the last week. You can see in here it's been in a declining mode. Now, if you just point right down over here, you could see that's what we expected it to decline into this zone right here. It's a little bit late, and there's some support. You could see this one coming right across here. So we think Electric Arts is going to make at least a temporary low. You could see we're looking for a bounce right here, and then we're going to look for another decline over there. So Electronic Arts down 19% on the week. Solar City, SCTY, this is actually related to the collapse, I would say, that's going on in Tesla. Of course, Tesla is involved in here, and it's owned by a cousin of his, and their earnings report is on 2/9 next week after the close, and this stock absolutely in a declining mode. Here's the thing about this. We have hated this one, and like some of the other solar companies, look at these losses that they're looking at in 20 and 15 and 2016, recently revised to the downside. So this in here has been a decline that looks to continue out until the early part of April. A bad looking stock in there, but you gotta look at Tesla, TSLA. Their earnings on 2/10 after the close next week. This one was in a declining mode. You can see right over here, we had projected that it declines right down through this period, and it breaks through this big support zone over here. We weren't sure it was going to get that low, and continues to move down. So we're looking actually for a bottom to form in here, but who says that the earnings next week can't get it to break some more before the bottom is made? We think the bottom for the stock is going to be made in the next couple of weeks, and then some temporary rally in there. But Tesla down 16% on the week. Analysts all over it. This Model X sales just absolutely horrible. It's just way too high priced, and way too ugly, if you ask me, compared to the piece of art that they came out with in their original model. So this is a stock that probably is going to make a low soon, but look at that declining mode in there. KSS, this one hurt the retailers this week, and you can see in here, this is interesting because we expected the bottom right here. You can see that, and that's these lines right here. And then we got the rally into the cycle projection area right there, hit the resistance zone, and then the earnings come out and it turns south. Actually, sales missed absolutely huge. They guide lower. This doesn't have a low due until April. Want these charts? Subscribe to Slim Charts, and then you'll be able to have these on your TOS platform. So this is the Kohl's chart, and they're down 13% on the week. Amazon, they had great earnings, right? I mean, the stock down 12%. I'll show you the daily chart in a second. You could see it's in a downtrend in here. Our cycle pattern suggested it would decline during this period. A low due in here in the next couple of weeks. So we're going to look for this area right over here. We'll call it 490, 495, the place that it comes down and tests. We're going to look for that to hold. Take a look at the daily chart in here. Man, what a head fake right in here, as it had this big rally right here. There you go. But the cycle pattern said down, and look at that. It fails. You have this big downside rejection right over there. This is called a negative kicker pattern, and then it falls consistently down there. You could see here we're looking for a bottom to form in just the next couple of days. So we're going to look for this 490, 495, and then a big bounce likely coming in Amazon. So that's all the charts that I'm going to show you right now, and just a couple of other stocks to mention in here is the ConocoPhillips COP. They're down 14% as their dividend was cut. Yelp down 13% as we look for that to decline in April. Pretty bad pattern. Trip down 12%. We're looking for a decline for that into April too. And there's 15 more stocks in our list that were down like 8% for the week or more, and it's just been an earnings nightmare. That's it for the worst of the week, and be right back with your emails. Emails and tweets. First, I have to thank all the people that have sent us great emails, our subscribers, level 3 and 4 specifically, that have been using our new rankings and trade setup service, and great emails we've gotten from you. And of course, we have been hot. So under those conditions, no wonder you're liking it. So we hope we can keep bringing a good service there. I could have shared a lot of emails on that, but I want to share one because I think there's a lot of things of value in this. This is from RE. He says, Slim just upgraded to be able to get the rankings and trade setups. This is a fantastic addition, he says, and has already paid for itself. Is it possible to have profit and target and stop levels added to the daily summary? Thanks, Ari, for a really great comment. We intentionally design rankings and setups as an extension of our chart work to be able to really show our analysis, to be able to do that, to see analysis on 70 of the best traded symbols that there are all in one glance, I think is a very unique service. And we do that in 3 different time frames, so it's really for traders of different holding periods. I know the majority of the trading sites, the ones that give information and give trades, they do what you're asking. They give the exact trade when they get in, and they have stop levels, and they have trade objectives, and they let you know when they're getting in and when they're getting out of the trades. I get a lot of requests to do this. Or to see my exact trades. Just had several of them in the last week. Our philosophy is that we don't give exact trades. I'll talk more about that. What we do is we share our analysis. We give zones in which on the charts we think certain things can happen, and when a favorable trade is possibly setting up. Each trader has their own style, their own market commitment, their own risk parameters, their own holding periods. They're just because I say something or I see something or I make a particular trade, it doesn't mean that it fits for you. We believe it's the utmost importance for the success of each trader that they take ownership of each trade on their own. So if we gave targets and stops and let you know exactly when we're getting in and out of trades, we think that would be detrimental to your long-term success and to most traders building a successful career or doing successful investments as they handle their own funds. When a trader becomes dependent on a third party, that actually adds risk to them. The experts are often wrong. I'm often wrong. I talk about that. I try to get to be 60 or 65% right, and I think that's a good edge. And what it does is when we give all those specifics that you're asking for, it really inhibits personal development. What we provide is analysis. We look at momentum, and we look when conditions are setting up and suggesting certain things. We look at specific time frames, and we give notifications when analysis is suggestive that certain conditions exist and that there's a favorable entry there, because favorable entry is so important, especially for avoiding the psychological triggers that can be wrong when a trade goes against you quickly. So we try to avoid that. And we put in these zones, and we talk about these setups and then it let you make your own decisions about the trade that is the best fit for you. I hope this design really works for you. I know it has for many of the people that have been writing for us, and that all of our level 3 and 4 members and those to come continue to benefit from the work. So thanks for a great email. It really gives me an opportunity to expand on our philosophy as far as trades and trading setups and giving trades and stuff like that. So thanks a lot, RE. Really a great question. Got a question from GM, and he says, I'd like to know your view on the credit card companies. He says, I'm interested in Visa, MasterCard, and American Express. I'm thinking that Visa and MasterCard are potentially going to make a bottom soon. They had good earnings, he says. He says American Express continues to lag, and they had a bad earnings report. He says, I believe American Express, AXP, is a short on rallies. In this case, though, looking at this analysis, he says, I'd like to do a pairs trade, long Visa and short American Express, or long MasterCard and short American Express. Wants to know, based on the analysis, which one of those, Visa or American Express, Visa or MasterCard, would I be a buyer of, and have that be the long side of the pair trade, with American Express being the short side of the pair trade. So what I'm going to do is share my analysis on these credit card companies. I got to tell you right off before I put up the charts, I'm actually negative on all three that we're going to talk about right now, and I'll show you why. And then we'll talk about this pair trade that you're discussing between MasterCard, Visa, and American Express. So the first thing we're going to do in here is we're going to look at the chart in American Express. You could see that right there. And of course, this is our weekly chart. And what we always do is do this kind of analysis on weeklies to start because that gives us a good sense for the condition of a stock. So here's American Express, and the one that you said was the weakest. Now you could see this big red zone it's in. For those of you that are new to this style of cycle analysis, we use different variations of ways to illustrate the condition of stocks. In this case, we have the green zones when it's positive, the yellow zones when it's corrective, and the red zones when it is falling. And these are cycle brackets down here and give us a sense for the timing of moves. You could see in here, I'll erase these, and you can see in here that there are some bigger and smaller patterns in here. So if you look at the smaller patterns right in here, you can see the rally and sell-off, rally and sell-off, and the rally and sell-off, and the anticipated rally and sell-off. You can see that right there. So American Express certainly did take a big hit, and that one looks like, well, it's got some room to bounce in there and is in a very short-term rising phase. So let's take a look at MasterCard MA, and you'll see in here when we look at this, well, MasterCard, this is in an area that it is in a decline and looks to be in a decline through April. It's gotten some good bounces already, so you suggested potentially making a bottom. To me, I see a bottom coming in March or April below the $80 number, so this one potentially has $8 or $10 to fall in there. Now the next one we'll look at is Visa, and here is that Visa, and that is, as you can see, already bouncing and coming up to a resistance area. In fact, this shows up on our rankings and setups in here, and you can see we're looking for a decline in here to come from this resistance area down to this support area down near 64. So you are essentially saying that you want to buy MasterCard and or Visa and sell American Express. It looks to me like MasterCard's got a little bit more room to go than Visa on the upside. So under the premise that you were going to buy Visa or MasterCard and then sell American Express, it seems to me that number one, you would do it with equal dollars, so it's about 8 to 5. If you did MasterCard and sold American Express, it looks like MasterCard would be the one to be the buyer of. So you'd buy approximately 500 shares of MasterCard and short 800 shares of American Express to be about equal in dollars and equal on the trade, if you believe that that's the way to set up the trade. Truth is, I see them all negative, and I see American Express as the one that probably isn't going to fall as much as the other two. So I could be wrong, of course, but I actually like the other side of your trade, and I would prefer to be long American Express and then short Visa or MasterCard, and to me it's actually Visa. So I'm going to take the other side of your trade. If this were traded or faded and you offered me that pairs trade, I would say I'm going to fade it. Anyway, good question and a good opportunity to do some of that analysis. ML writes me and says he'd appreciate my thoughts on FCX. That's Freeport moving forward. He says, with a strong possibility of oil and metals moving up in the near term, and that FCX seems like it would be a good one to rebound from current levels. He says also that my charts have indicated that. That's actually true, and I want to go over that. And I actually this week did a special stock sectors on the on that group, the materials group, and I'm actually in agreement with you. So again, we're going to put up a weekly chart in here for you to see, and again, nobody does charts like I do, so there's a lot of information in here. There's a dotted line in here, which is copper. You will see that. And we show copper being in a rising period and bottoming. So the commodity that FCX follows is gold and copper. And of course, gold's been rallying already. So we believe we're in a rising zone. And we do expect to see a rally here close to $8 in FCX. It's now trading at $5.72. So we are actually quite in agreement and thinking that this particular stock has got some upside. So yes, like it, you are reading my charts correctly, and we believe that FCX is in a rising phase. And if you watch our stock sector segment there, you will see that we think that that sector is interesting. KC writes me, and he says, we've passed some messages back and forth recently, some emails on the oil refining group. He says he wanted to see what I had expected for them. Being that I have had, and no secret, I believe that oil had made a bottom and was going to be in a favorable period here. And we've seen that actually happening. So you want to know, you know, how that would affect the refining stocks. Generally, what I would expect would be when oil is weak, the refiners are stronger because the input costs for them are an issue. When oil's higher, and it favorably affects margins when oil's lower. Also, you made a point in this email that there might be inventory issues for the refiners also. So it's really interesting. MPC Marathon came out, they're a refiner, with their earnings report, and that earnings report did not show favorable margin situation, even though they had you know, low input costs with the oil. They might have hedged a lot in advance, or they just simply might have inventory issues. But these stocks got sold off quite hard before oil started to move up again, and that's kind of an unusual situation. I think investors in the know were really anticipating that, you know, inventories were an issue for them, and that a balance was going to negatively affect this group. But you got to start out by looking at MPC, which really got hit the most. Take a look at this pattern in here. Now, we've noted a couple things for you to see that. First of all, this is a nice double top. This is called a dark cloud cover in the candlesticks, and after that it broke down. Cyclically, we expected a bottom here and got it. We got the rally, but then it broke down under that level. That's a cycle breakdown, and that decline doesn't really end until sometime in March. So this is really you know, a horrible picture, and you can see the stock has fallen from 60 all the way down to 35 already. So say horrible picture, it's really hindsight, right? Take a look at Tesoro, TSO, and Valero. Those are the other two we're going to look at, and you can see there's synchronicity in these patterns, as the low is expected also here in the March or April window. And when we look at Valero, VLO, this one also, you could see we're looking for March or April window right down over here. Support around 54. The stock is trading back up to 62 from around 59. This really looks like a sell right in this area right here for another move on the downside. So this whole group surprisingly has got more issues than I would expect it to have, and it does not look very good. Last email from KM that I'm going to share today, and that is an interesting question. Every single Wednesday I do a show called Futures Speak for our members, where I go over 25 different futures contracts. Now, this question makes a lot of sense. He says, can you tell me why you use in this analysis SPX instead of ES when I do all of my charting? He says, in your cycle analysis, you use for all the other futures the actual futures contracts. And he says, you do a wonderful job in Futures Speak. He says, I'd love to see your upside and downside ranges actually in the futures in ES. or the other index futures rather than just using the cash indexes. Could you tell me, he says, exactly why you do that? Thanks for all you do for us. The first part of this is that stock indexes are actually quite different than the other futures that I look at. The situation is that when most of the futures roll, whether they're in contango or backwardation, that usually the differences are minimal. So when the charts roll, it does not affect very much the support resistance areas where we put in trend lines, stuff like that. If we have to make any adjustments, it's really small. So we do often enveloping on the cycles and a lot of other things that exist on these charts that we can leave on there, really. And the S&P 500, SPX, and the other futures, when they roll to a very large discount. Now, I'm not going to talk about what the discount is created by. There's a lot of components in there of dividends and interest rates, holding periods, all of that. So there's ways to calculate what the discount is, but they're big discounts, and generally about 11 to 13 points they've been recently on the roll. That's a big difference, and that means that when each roll comes, all of our, if we were to do it on the futures, when the roll comes, we have to redo everything, all the analysis, all the numbers. S&P 500 on the cash index, that's totally consistent, and everything we do stays. So that's why we do all of our analysis on the cash index. We don't have the big variance in the discount in there. That's the backwardation factor, and then it's much easier for us to do work forward. And then when we analyze this stuff every single day, the numbers are really true that we look at. So that's why we do that. It's a really good question for those people that do their charting on ES or the other index futures. If you're doing it on intraday patterns and you're kind of a scalper or day trader, it's not going to make that much difference to you. We do it predominantly on daily and weekly patterns in our presentation, so it's important to us. So you might look at that. Good question, though. Thanks a lot. All right, so speaking of the S&P 500, we're going to go right now, and we'll be right back and bring you our short-term view. All right, short-term view of the coming week. Do this every single week. We take a look at 5 major markets that we trade and then take an accountability of how we did in the last week, and then take a look at what we expect in the next, we'll call it 4 to 7 days. In this case, I'm going to be gone next week, so we'll make this short-term view with a little broader perspective over the next couple of weeks. And I'll start right now with light crude, as we always do. Here is that light crude chart. So we're going to give ourselves overall for the week a 60%. Light crude is one that we basically got correct. The pattern, basically, our notes show a check mark. In other words, this kind of a pattern is what our expectation was. Now it's pulling back a little bit here at the end of the week, but it did basically what we expect. What we expect now for the light crude market is that this support is going to hold, that you see minor support, and that we're going to get another rally in here. Now we're going to look for a move up here to the 3340 to 3470 number in light crude, and then roll over for another correction. Now, if in the case, and of course anything can happen, that this area around 2950 gets broken, that's going to change the pattern to more negative. We don't think that's going to happen, but of course anything can happen. We're going to look for a continuation of this uptrend that is developing and a up week in light crude. Next thing we're going to look at is the gold market / GC. We actually thought gold last week was going to have a correction, but this break in the dollar really made that impossible. As a matter of fact, gold hardly has had a downtick this whole week. Let's take a closer view right here in /GC, and you can see trading right now at the highs of the week, up 10 bucks on the day here on Friday. And look at these white bars, all of these white bars all week long, and that is a very, very strong gold chart right there. We're going to look for what we thought was going to happen last week, and that is the rolling over. Even though we've been extraordinarily bullish on gold, we were just looking for a little correction. We're doing that same thing right in here. As you could see, that cycle pushing down. So we're going to look for a pullback. We're going to call it around 1130, just to this kind of support area over here, now trading at 1167, and then up again in here. So that's kind of the pattern that you could see shaping up, and that's over the next couple of weeks. So we'll look for a pullback. We'd be a buyer down in there in that 1130 area if it happened to get down there really quick, and then it would be, I think, a great opportunity. Next one we're going to look at /6E is the euro. We thought this would that it would be affected by a negative dollar. We really thought the dollar was going to have a hit and that the euro would move up. Now, we kind of downgraded our expectation as far as the high we were looking for, but we thought the pattern still was up. That's this one right in here. And you could see that worked like a charm. Now we're looking for a similar pattern to gold, and these things track together a lot because they're inverse to the dollar. So we're going to look for a pullback in here. We're going to look for a test of about, we'll call it 111.06 in the euro, 50 cents, maybe a little bit more to the downside in there. This next support over here is around 110. So into this support zone, we think it's a buy there. You could see our short-term patterns right in here. And when we do this on the short-term view, we're only looking at daily charts. So that's that right there. We think it comes into the support and then rallies. That's how we do our projections. So we're going to look for a small down week here in the euro, testing that zone and then moving up again. The stock market, the bond market now we're going to look at. We look at the 10-year in here, but the 30-year certainly is very, very trackable and tradable. We thought there'd be a minor pullback in here, and all it's managed to do is some upward chop and not being able to give anything on the downside at all. You can see these little attempted declines in here that just bring buying in again. Again, this pattern is very similar to the other ones. You see, we're looking for this period and here to bring a short-term drop. So we're going to look for a decline, test 29.15 support right over here, and then up again. The euro, the gold market, and the bond market trading together, they have locked together, and the same type of a patterns that you see right in here. So we're going to look for a pullback in there of some minor consequence and then moving back to the plus side again. So all of those things pretty much looking the same type of chart patterns, and they are right now trading pretty much together. So that's what we'll look for in those things, pullbacks in gold, euro, and the bond market in the next week, minor ones, and then move to the upside again. Gold, light crude, a different pattern, as that one looks like it's in an upside move, watching 29.50 as a reason to be concerned about that more bullish pattern. The next thing we're going to look at is the stock market. I should almost get double credit on this one because a remarkable last week that I said I thought that the S&P 500 would come up and test 1947 and then would then turn down, and that we're still in a period of a lot of risk. Take a look here at this S&P 500 chart. It is pretty astounding, and I'll put that up for you right now as we move into these cycle patterns, and now you can see it. SPX, there you go. And that chart right there is just a amazing thing as we've gotten right here tonight, just above 1947. You could see that trade hit the top of our resistance sell zone and then whack as it absolutely gets cremated during the week. So what does this pattern now look like? Well, so here we are. This you see that number 10 on this day, so we're 12 days off of that key low. Generally we've been running like 13 to 17 days are these cycles, so we're going to look for like 2 to 4 more days on this downside right over here into this target zone that we have right here, that we think that there's a good possibility that the market trades down to. This support, bottom of the support is 1864. This 78.6% number is 1848. We think it's going for one of those numbers in there, and that is going to be a short-term bottom, and the market will survive not making that low over here at 1811. And then we think we're going to get into more of this what we believe to be an upward correction that's going on right in here. So we think we'll get this kind of action, another attempted rally, and then we think that there's a massive decline out over there. I'm more worried about being too optimistic about this bottom in here for short term than I am worried about whether or not we're going to get more decline here out in February and March. So this period in here, as we say, we look for another, let's say, 2 to 4 days on the downside, and then making a bottom and then moving back to the plus side. We're going to take a look at the VIX, and remember we said maybe another 2 to 4 days and then the market rallies. We think that this period in here is that 2 to 4 days. Then we get a pullback like this over here as the market gets a bounce, and then out over here into later in February is the point where we think that the VIX moves up very sharply. So that points to where we think the next big decline is in the stock market. So look at this inversely, more on the downside for a few days, a stock market rally for several days, and then a big decline again in the stock market. Notice that I did that reverse, and that's really how these things are setting up. That is it for the short-term view of the week. I hope you have loved it. I hope you've been able to make some money on the stuff that we've been bringing here every single week. It's our goal to raise your probability of success. Support us by becoming a member. We're going to have a price increase coming pretty soon, so now is the opportunity to get in before that happens. You can get 7 different categories of videos for just right now $27 a month, and you can get our rankings and trade setups, which is incredible, for just $77 a month. So our prices are not high, and you get a ton for what we do. So go and subscribe right now. I'm off now on vacation, and I will be back with Market Week in 2 weeks, and all of our members, they've received emails and know what our calendar is for next week, and we've got lots of stuff coming. I will see you then right here in 2 weeks, and I'm always wishing you great trading.
Well, I'm going to say